Now, the bubble debate is in full swing in Silicon Valley, and it's got everyone comparing the current environment to the late 90s. If there's one thing that's not comparable, though, it is the costs associated with starting a company. Startups across the board are more nimble and less capital intensive. My next guest knows better than most. Saeed Amidi is a founding partner with Amidzad Partners. His plug-and-play incubator helps startups get off the ground, and he joins us live now from Palo Alto. So, Saeed, first of all, I want to backtrack a little bit. You were one of the earliest investors in PayPal because you basically rented them office space. Explain to me how that happened and how it led you into tech investing.
You know, we have this building, 165 University Avenue, and when Peter Thiel was negotiating the lease with my brother Rahim, he negotiated the early investment in PayPal that it turned out to be a fantastic investment for us. And that is sort of the extension of what we are working on now with Plug and Play Tech Center, where we house over 300 startups. And when we kind of see the excitement and the momentum building up, and we generally co-invest with the VCs, with Canaan Partners, Sequoia, and some other venture firm in exciting startups, sort of using the real estate as an angle to get to know the entrepreneur.
So what are some of the most exciting companies that you've gotten in early on through this method of investing?
You know, Zoosk is maybe by far the most famous one. It's sort of the leading social network dating site. So they kind of address the same problem as dating that Match.com or eHarmony has addressed for years. But Zoosk used the Facebook as a platform to increase their customer base early on and has built a great momentum and kept going. The other leading company that came to Plug and Play when they were 2 people, and then they graduated when they were about 50, is Lending Club, which is again the _1 peer-to-peer lending that was launched at Plug and Play. And then, as I said, about 3-4 months ago, they graduated from Plug and Play. And they are sort of the leading peer-to-peer lending company in the world right now. And again, through this community of Plug and Play, we also met Dropbox, the founders, and were able to co-invest with Sequoia in Dropbox.
Saeed, it's Julie here. I'm curious to sort of broaden it out from just the specific companies you're talking about. I know Business Week profiled you back in 2009, and obviously the broader economy wasn't doing very well right then, but you were seeing a lot of demand at that point. You were planning on expanding down to Southern California. I'm curious, since we've been talking about the potential bubble with so many folks, the differences that you're seeing between 2009 and now in terms of the types of startups, the demand for space in your real estate areas at this point compared with then?
You know, I believe, as you have discussed in your show, it takes a lot less money to build a company right now. And using the iPhone or iPad platform or the Android platform or the Facebook, 2-3 innovative entrepreneurs can build a great company in a very short time with very little money. So the real estate aspects of it, I mean, for sure, the market has come back, but I don't think the startups need as much space as before. The majority of the startups in our facility even have technical teams overseas, and they kind of leverage the technology to build their teams and their companies.
All right, Saeed, that's interesting stuff. Saeed Amidi of Amidzad Partners and Plug and Play. Thanks so much.